In this video, I'm going to share with you my step-by-step trading strategy that has got me funded over $800,000 in just 90 days. This is the exact trading strategy that all of my exclusive members use, and here is a sneak peek of some of the incredible results that they've achieved trading this exact system. In this video, I'm going to walk you through every single step. There is 4 steps in total. For those of you that are new here, my name's Liam, and I've been trading, investing, and coaching within the financial markets for the last 8 years. And I'm a mathematics and finance graduate from Newcastle University. And so I like to think that I know a little bit about trading, investing, and mathematics. And so, I'm really excited to share with you everything that I've learned along the way. Okay, so we're currently looking at the US 500 on the 15-minute time frame. And so this is a 1 time frame strategy. And step number 1 is identifying daily directional bias. And all this simply means is when we turn up to the market, are we looking for longs today, or are we looking for shorts today? And so this is really what I call a market regime. Okay, so this just means, we're applying a filter to the market in order to identify, we are long bias, we are short bias, or we have no bias within this current market. And so a very objective and simple way to identify our directional bias is by simply using a 50, 100, and 200 exponential moving average. So when the 50 is greater than the 100, which is greater than the 200, this indicates that we are long bias on this market. And so we will only be looking for long positions. If the 50 EMA was on the bottom, the 100 was in the middle, and the 200 was on the top, this would indicate a sell daily directional bias, and so we would only be looking for shorting positions. If the EMAs were crossed over in any form, this would indicate that we have no daily directional bias, and so we would not be looking for any positions within that market. And this is where so many traders are going wrong, because they're using subjective ways to identify their daily directional bias, to identify their market regime, right? If it's very complicated and you can't really quickly identify whether you're long or short bias, then it's very likely that the system or the rule that you're following is very subjective. Okay, so step number 1 was incredible, but if you don't understand step number 2, there is no way that you will ever be able to time the markets correctly. And so step number 2 is manipulation. And in particular, this is session-based manipulation. And so what I want you to do is head over to the indicators tab at the top of your screen. And I like to use this session indicator right here, which is called Trading Sessions-Sonar Lab. And this is by Vutra Trading. And so you can double click this and apply it to your chart. And then what we have is we have the Asia session from 7 p.m. until 12 o'clock midnight, the London session from 3 a.m. until 5 a.m. And we have the New York AM session, which is from 8 a.m. until 10:30 a.m. Eastern. People may use slightly different variations of these timings, but these are the timings that have worked the best for me. And bearing in mind, this is Eastern timing, EST. And what I will say is primarily most of our trades are going to be taken during the New York session, and some of them may set up in the London session, but I would say primarily most of your trading setups are going to be taking place during the New York session. Okay, great. So how do we identify manipulation in the market? Well, what you need to do is you need to mark on the previous session's highs and lows. And because we're bullish in this market, right, we're looking at the US 500 on the 15-minute time frame, we need to mark on the previous session low, which is the London session low. And so because we're long bias in the market, what we're looking for is a raid of sell side liquidity. We're looking for a manipulation to the downside before we can get long in this market. So this ensures that we're getting a discount in the market. So as you can see, price starts pushing lower to the downside, running below this London session low. And what this is going to do is this is going to trap traders short into the market, thinking that this is a breakout to the downside. And so this is going to induce them short. What this is also going to do is it's going to stop out any early buyers from the London session, because their stop losses will be resting below the London session low. And so this manipulation is going to be stopping them out. So not only is this stopping out early buyers in the market, it's also inducing traders short into this market. And so they are going to be on the wrong side of the market. Something very important to note here is it doesn't matter if we body close below this level. Even if we just wick below, kind of like what we've done right here, this is okay, right? This is still valid manipulation. Step number 2 was incredible, but step number 3 shows us our exact confirmation. So what we're looking for once we've seen this manipulation right here is we're waiting for a bullish 15-minute confirmation. And it's very important that we wait for the candles to close. So once this candle closes, this indicates to us as a trader that buyers are actually present in this market. So this really just indicates that bullish momentum is stepping into the market. And so this is now starting to shift the probabilities in our favor. Whereas when we were seeing this manipulation, we didn't know at this stage whether price was going to continue lower or if buyers are actually going to step into this market to essentially show their hand. And you know, one thing that took me years to work out as a trader is we need to be reactive in the market. We don't know how buyers and sellers are going to perform at certain levels. And so we really need to wait for them to show their hand first. And then once we've seen that, we can look at acting accordingly. And so once we've seen a bullish confirmation, we can enter on the break of this candle high. So this is also really, really important. We don't just want to enter on the close of the candle. We want to enter as price breaks the candle high, because this indicates again that momentum is really stepping into this market and further increase the probabilities that we're actually going to push to the upside given our market regime and given our directional bias. Step number 3 was great, but how do we know actually where to place our take profit and where to place our stop loss? And so step number 4 is stop loss and take profit placement. So what I always do pretty much 99% of the time is I will enter on the break of this bullish candle high, and this will be via a buy stop in the market. And so because we're looking at the US 500, what I like to do is put a buy stop 0.5 points above the 15-minute bullish candle high. And this is just to account for spreads in the market. Then what I like to do, and what I always do, is I put a invalidation at the liquidity sweep low. As you can see, down to the low is 7.8 points. And again, I always like to account for spread. So I'm going to make this 8.3. And this is just, again, to add a buffer below the 15-minute candle low. This ensures that you're not getting stopped out prematurely. And then what I always do is target a repeatable mechanical 1 to 2 risk to reward. So we're not looking for a home run in the market. We're not looking for a crazy risk to reward. What we're looking for is to take a small, bite-sized, repeatable piece out of the market. The reason why I have an invalidation below the liquidity sweep low, below the manipulation low, is because just think about it logically, right? We've confirmed bullish. We shouldn't really see price come down, make another lower low. At that point, we're seeing bearish price action. We expect, further lower prices. And so it's really important that every single trade that you place, where am I going to be wrong in this setup? Where am I going to be incorrect? Okay, so I was triggered long in this trade right here. And just so you know that I'm not cherry picking this trade, here's the analysis that was sent ahead of time to the exclusive community. And here was the exact execution of this trade. Okay, so now that we're triggered long in this trade, it's literally just a case of setting and forgetting this trade. So we're not looking at micromanaging, we're not looking at getting emotional, closing the trade early, or even going break even too early. Understand, with this trading system, once you are triggered in this trade, it's just a case of either your stop loss is hit or your take profit is hit. And as you can see, this trade did hit take profit for a 1 to 2 risk to reward. And here is the execution proof of this trade from my FTMO dashboard, which is one of the most credible prop firms in this space. And it's really, really important to not get emotional on these pullbacks in price. A lot of traders are going to get emotional here. They're going to close this trade early. They're going to go break even too early. And often what I found is this is not an optimal way to trade this system. Okay, so I'm going to cover another trade in just a moment, but I just want to recap and summarize everything that we've just covered. So step number 1 was a daily directional bias, right? We had the 50, 100, and 200 EMA. Because the 50 was greater than the 100, which was greater than the 200, this indicated long bias on this market. Step 2 was manipulation. So we've seen a manipulation below the previous session's low, so below the London session low. Step 3 was our confirmation. So this was our bullish confirmation right here, indicating that bullish momentum is stepping into the market. And step number 4 was invalidations in targets. We had a clear invalidation below the manipulation and a clear target at a repeatable mechanical 1 to 2 risk to reward. And so really that's how simple it should be in order to make a trading decision. And understand that everything is fully defined here. Everything is fully rules based, and there's no real room for any discretion in the market. And so this should really help to remove any emotion when making trading decisions. Okay, so we've looked at a long trade example. Now let's have a look at a short trade example. So we're looking at gold on the 15-minute time frame. So step number 1 is daily directional bias. And in this scenario, it's the complete opposite, okay? So the 50 EMA is less than the 100, which is less than the 200. So this indicates that we have a sell daily directional bias. You know, even if we just zoom out here and get kind of a general macro perspective, right? You can see price is moving from top left to bottom right, okay? So just in terms of kind of like a general direction, the expectation has to be lower prices. Okay, great. So yes, this is pretty choppy price action for sure, but we still have that tendency. We still understand that the likelihood is actually lower prices in the market. So we're heading into the New York kill zone, and this is between 8 a.m. and 10:30 a.m. Eastern. And so I've removed the EMAs, but please keep in the back of your mind that we are sell bias on this market. So because we're sell bias, we need to then go ahead and mark on the previous session's high. So this is the London high. And so we're looking for a manipulation above the London session high. So we need to see price manipulate higher before we can short it lower. And so we're starting to see the manipulation. So what this is going to be doing is inducing traders long into the market, thinking that this is a breakout to the upside. And this is also going to be stopping out any early sellers. So any sellers from the London session, their stop losses are going to be resting above the London session high. And so this is going to be manipulating traders on both sides of the market, right? Sellers are being manipulated out of their positions and buyers are being manipulated into positions thinking that the market is going to go higher. So initially my sell stop was placed on the break of this candle low, right? Because this is step number 3. We've seen a bearish confirmation after we've seen a raid of buy-side liquidity, after we've seen a manipulation. But what you can end up seeing is price then pushed higher and broke the high of this 15-minute bearish candle. So in this scenario, what I do is I remove my sell stop out of the market. So my sell stop was originally placed right here, but because the sell stop didn't get triggered, and what ended up happening was we broke the bearish confirmation high. This starts to indicate to us that, buyers are actually still in control of this market. So what I recommend you to then do is to sit on your hands and wait for another 15-minute bearish confirmation, because we don't know how high this manipulation is going to go. We then get another bearish confirmation right here, another bearish 15-minute candle. And so this is step number 3, right? We've seen our 15-minute bearish confirmation, indicating that sellers are stepping back into this market, right? We're seeing bearish pressure step into this market. And so step number 4 is our invalidations, right? They always go just above the liquidity sweep, just above the manipulation, and then always target a repeatable mechanical 1 to 2. And so I was triggered short in this trade right here. And then it was just a case of allowing this trade to play out. And as you can see, within 30 minutes during the New York session, this trade had hit take profit for a 1 to 2 risk to reward. And then what we ended up getting was this very strong reaction from this level right here. And we got a bit of a continuation to the upside. And that's why it's very, very important to take a repeatable 1 to 2 out of the market. Because we don't know, especially when you're trading a New York session where the volume and volatility is very, very high, you can get reversals very, very quick in the market. So it's very important to bank your profits, take what the market has given you, move on, repeat, and then come back the following day and execute your trading plan again. And so just to summarize the setup, step number 1, daily directional bias. The 50 was less than the 100, which was less than the 200 EMA. And so if you would like to learn more and you would like to see me trade this live every single day in the market, and you would like to learn the exact blueprint to this fully mechanical rules-based trading system where I hold your hand step by step in the markets, then make sure to check out my exclusive community or one-on-one mentorship. The link is in the description down below. As always, thank you so much for your time and support, and you take care. Bye-bye.